All right, guys. So let's get started. Actually, hold on. Okay. Okay, so we start with I'm gonna go day by day for euro, and then we'll head on over to gold. All right, so on euro, hopefully join. Okay. Euro ended up taking the highs over here. My bad. Right there. After that, if you go on the 4-hour time frame, automatically just in current price action, right? There's liquidity to the downside. So our eyes should automatically be towards the lows, right? Or at least right here. Let's go down to the 1. I believe it looks a lot cleaner. All right. So after this BOS to the upside, right? The market pulled back, printing this low, which was actually used again after, right? So sorry, before the BOS, market printed this low. After that, there was a BOS to the upside, market came lower, and what did it do? It respected this whole area. All right, so respecting that area builds liquidity for us to either target or take something after. Okay. So now that there's liquidity there and the market moves to the upside, create another BOS. It did take out the highs to the left, which are right here. However, it didn't really take anything else, right? There's still these highs over here and whatnot. It even left damn, I guess everyone's trying to answer right now. Okay. So respecting this low builds that liquidity, right? Also, it's a humongous wick over here. So everyone's gonna be looking at it as a form of, like, let's say, just entering the trades, right? Looking for longs. This kind of entices or induces traders to buy from, right? Thinking there's a lot of buy pressure or whatever you want to call it. Also, if you look at it this way, right, you got your little support resistance or whatever. So there's liquidity below here. All right. So what ends up happening is, let's look at 3 a.m. Oh, this was 3 a.m. Okay. So just do this. All right. Okay, so the market takes up the highs, comes lower. I believe this was a gap left during the weekend. I would have normally used forex.com to do the breakdown. However, the feed kind of shut down on Friday, and I don't want to switch in between. Anyhow, the market moves to downside, respects this area, right? 3 a.m. comes lower, takes out this liquidity, and then moves to upside. I wouldn't be looking for anything here, only because there wasn't, I mean, the market just opened, had this huge gap, whatever, and there's not much price action to go off of. Also, just took out this high to the left, so trading from here would be essentially with retail, right? All right, so London opens, moves to the upside, grabs all this liquidity, Okay. That happened around 6:15 EST. And then after that, moves lower. Right, coming for the liquidity to the downside. Pulls back, respects it, moves lower. And then finally traps sellers. Okay, so sellers got trapped on the lower time frames. Right, taking all this low, inducing sellers. Obviously this is a 15-minute time frame. Yeah, so it'll be US to the downside, inducing sellers, market respects it, moves lower, right, grabs all the liquidity that's here, and then finally moves to the upside. Also coming into this whole area, you can see the market has another BOS to the downside. And then finally moves higher. All right. So this was, I mean, let's see. Yeah. So after trapping all the sellers on the lower time frames or on the 15-minute time frame or the 5, the market finally has to move down, right? I wouldn't be looking for anything at the extreme. It does do something like this where it respects the low, moves higher, comes for this right here. But this is not something I would enter from, right? It's just like as a confluence to see the market move lower. After that, okay. After that, the market, I believe, just sells off to here. What time was this? This was 11 a.m. Wait, I'm tripping. Monday, 6:45. Okay, so 8 a.m. has the move up, right? Continuations, I believe, would be right here. Yeah, so honestly, because Euro took out the high to the left, right? I wouldn't be looking for any type of short or buy, to be honest, until more price action forms, right? After that, you can see Euro actually had that BOS to the downside, respected it. So liquidity being at the highs. The only thing which was which you could have possibly taken. Actually, I don't see anything. Even on the 1-minute time frame, not like there's no clean liquidity block from the left. So taking anything from here would just be, I mean, yeah, what just wouldn't do, you know. Also, the 1 minute, all I did was just grab it and then start moving to the upside. No entry model whatsoever. However, if it did come lower, right, this being a liquidity block, you could have easily taken the trade. Or if there was a liquidity block here, so let's say the market did something like this, move to the upside, where I printed these lows, whatever, took it out, and then moved higher. This being that liquidity block, this being the trap. This you could have possibly taken it from here. However, there's no liquidity block over here, so taking the trade would just be, I mean, taking it from here, you would have to keep your stop loss below there, right? And that just doesn't make sense, RR wise. After that, what ended up happening, I believe this was news. What time was this? Yeah, that's weird. I'm not sure what that was, but anyways, the market moves to upside, right? Respecting all these lows. Or did it take it out? Leaves equals, moves to the upside, grabs this high. Okay. Low key would have wanted the market to grab this too. Just leaves liquidity there, which is fine. right? More liquidity for us to target later on. Let me just mark this out though. Let's go back on the 5. Oh, I'm tripping. Okay. So on Tuesday, Monday just continues off. So no entries on Monday, to be honest, unless you took it for like this. This wouldn't be bad. Let's say right above this or right into this imbalance. Stops above. That's the only way I would have taken the trade. Only because, I mean, the market engineered that liquidity to the downside, right? So pull back, US to the upside, comes here, has reactions, right? So this is the only way I could have taken the trade was from this imbalance right here, targeting the lows, right? So this liquidity right here would be the target. Any questions for this trade or this breakdown? Any questions? Okay. That's good. All right, so the market moves to the downside. I believe Tuesday was the trade everyone else took. How do I fast forward? This is insane. Okay. Let's go down to the 4 hour real quick. Actually, the 1 hour. Tuesday, okay. All right, so what ends up happening is all right. So the market comes, right? Comes lower, grabs this low right here, and then moves to the upside. I wouldn't be looking for buys here, right? There's a shit ton of liquidity to the downside. Looking for buys, very low probability. And then what ended up happening, let's go on the 1 hour real quick. Okay. There's a lot of liquidity to the downside, right? And pretty much this whole area was already used as like a POI or whatever. The market comes lower, comes into this area, and then look at it from the retail perspective. This right here being that break of structure, right? You got your little break of structure, maybe right here too. And all the market did was come for all this liquidity, okay? Trapping sellers, inducing buyers, and then moved lower. I was waiting for the market to kind of come into here. I was looking for that. Obviously, because of news and everything, all the market did was just take out this high and then move lower. But anyways, market ended up moving lower, right? Trapping buyers over here because of this BOS right here. Also grabbing the liquidity that was left from last time, right? Right there. And then after that, this underneath being a liquidity block, right? Not really the cleanest of liquidity blocks in my opinion. Because I mean, there's like 2 lows right here. Those are already respected. So I wouldn't be taking like extreme entries. I would just wait for what the market does, right? And also because of the fact that the market cleared these highs over here. Taking the extreme entries just not something I would do, because obviously the market come lower if it wanted to. Anyways. Okay. So clearing all that liquidity, right? Respecting this whole area right here. Okay, so what does that do? Builds liquidity, right? So now there's the resting liquidity at the highs over here. So automatically, my eyes were right here, okay? All right, so what ended up happening was the market grabbed the low, okay? Coming into this liquidity block area, and then started moving to the upside. Let's go down to the 1 minute time frame. Okay. So on the 1 minute time frame, you'll see the market moves to the upside, right? Come lower, respect this low. Okay. So respecting that low builds that liquidity for us to take longs after it's cleared. Okay. Now we don't take it right away. We do have to see quite a bit happen. The market moves to the upside, right? All it does is just keep creating these lows, right? On purpose to build that order flow, right? To get buyers into the market and then trap them. All right. So what the market does is builds that liquidity to the downside, right? Comes lower. You'll actually see this whole area. Well, number one, let's mark this out. The area was respected. You got liquidity sitting below. And then finally comes into this area again. And then look at this. Okay. You got your little minor BOS. Okay. Inducing more buyers. Trapping the buyers and finally coming for this liquidity right here. All right. So this is where I actually had an entry. I believe quite a lot of you took the same trade, which was amazing to see. And then liquidity block being underneath. All right, so as for partials, you can take a partial right here if you wanted to. Or even right here, right? Liquidity being below there, or even just the tap of this right here, making price efficient again, and then finally right here, right? Yeah, pretty much, right? I personally, I targeted, yes. So I held to the highs right here, okay? I believe I took some partials somewhere along the way, but yeah, pretty much. I was targeting here, right? Because of that liquidity that was sitting above. Took about 90% out right here, and then left the rest to run, right? Having bad internet problems. Is this recorded? Yes, it's recorded. Wait, Elijah, what were you saying?
No, I was just responding to whatever Nuno was saying.
Oh, okay, I didn't see that.
No, no problem.
Uh, I was actually looking for one entry, but okay. All right, so no, were you talking about the entry right here? What was your question? Or was it not a question? Okay, while you write that, I'm just gonna continue. All right, so liquidity being above these highs, right? This is a really good partial point, or at least take 90% off there. Only because I mean Euro swept the highs, all it needs to do is trap sellers and then move lower, right? So, the market coming into this area does trap sellers. Okay, so this would be a good area to take out majority of your position. And obviously, like I said, you could have easily targeted some internal points if you wanted to, right? Let's say you wanted to pay yourself. It's never bad to pay yourself. So if you want to take partials at some internal points, that's completely up to you and fine, right? I thought I would sweep the low once more because it had a BOS to the upside. Like inducing buying and trapping. Okay, so let me explain that actually. All right, so even though there was this BOS to the upside, you have to understand where buyers were induced, right? So look how the market respected this, building that liquidity. Now, if from here, let's say the market just sold off, okay, and came into these areas, I wouldn't be looking for any buy entries, okay? I would wait for the low to go and then wait for another entry model, whatever, right? Only because this BOS to the upside happened, whatever. However, after that, right, after the BOS, you can see the market clearly came into this area, induced buyers again, right? So this right here, right, this BOS to the upside, is kind of like more of a confluence that the market should probably just come for this low, grab this, and then move higher. All right. And that's pretty much it. I mean, this part right here is important. You right, like the market just building this liquidity right here, right, and coming all the way down. Let's say just 2-3 candles straight down, grabbing this. Not something I would like to be a part of. Doesn't look that clean. This right here kind of gives me that confidence that, buyers were induced. Okay. Comes into this area, POI, order block, whatever you want to call it, has that minor BOS to the upside, inducing more buyers. You can also see a little order flow right here, and then comes lower, right? Grabs all that liquidity and then finally moves to the upside. All right. So let's go to, oh, this was Wednesday. Oh no, this was Tuesday. Damn. In that 1 hour. All right, so what the market did was just move higher and then finally clear the highs. Okay, grabbing that liquidity, and then finally comes for this high too. All right. This was Wednesday around 3 a.m. Let me see if there's any entries. Okay, Wednesday 3 a.m. Okay. So the highs over here were swept, okay? However, the market still respects this area right here. Right, so look at it in this perspective. Okay, so liquidity being above, the market doesn't grab that liquidity. All it does is respect it, build more liquidity there, and then come for the lows. Okay, so look at it this way. You got your BOS, inducing buyers, the market trapping them, grabbing this low as well, and then moves higher. There's no liquidity block here, so not some like not something I would take. To be honest, there was no entry model whatsoever. All I did on the 5 minute was grab the lows and then move higher, right? If it did something like this on the 5, let's say respect to this high, for instance, some sort of low, say took it out, whatever, took that out, came to the extreme. That I wouldn't mind taking. And then targeting the highs, right? At least right here. The inducement high. Or you could target up here too. Keep in mind that I have to react first and that. Yeah, pretty much, bro. All right, so Wednesday, London. The move was quite nice. It's just unfortunately there's no entries given to the highs. After that, I believe something from the left gets taken out. Let's see. All right. Oh, does it not get swept? I guess it respects it. Oh, okay. All right. Market has some form of liquidity to the upside. This current moment taps into this imbalance right here. I believe this is still London. Yes. All right. And then finally moves to upside. Okay. All right. So typically because Euro had such a big move, right? I mean, Euro doesn't really move that much, but it moved was 70 pips, something like that. Actually, from here it would be, yeah, like 50 pips. Okay, yeah, so since Euro had that massive move, I didn't want to look for anything on Wednesday. On Euro, only because, typically after a big move, there's like not much liquidity in the markets, especially taking out this high to the left. It's at the extremes. You kind of want to wait for more price action to form. And yeah, pretty much. I mean, all it did was just range. I believe the whole day was just about the rest of the day during New York, probably gonna move like not much, Just probably just gonna build that liquidity for later. Anyhow, we'll still talk about it. Okay. So market moves lower. Takes out the lows. And then coming to this imbalance right here. Liquidity being above. I believe it just comes for this now. Rest of Wednesday. Either way, end of day, you're not gonna really see much. Okay, so Wednesday will probably kind of be like a write-off, I would probably hop on a different pair only because of this massive move to the upside. Okay, so let's go down to Thursday. Thursday. 3 a.m. All right. I don't even think I need to replay. All right. Thursday, I believe some of you guys took trades on Thursday on Euro. Okay, so what Euro ended up doing was grab this liquidity, move to the downside. Let's go. Okay, we're already on the 5-minute. All right. So this BOS to the upside, right? Inducing buyers into the market. Also, there's liquidity to the downside, right? So you have to look at what the higher time frame is telling you. Go on the 4-hour. Grab the external high grabbed liquidity from the left, right? And then finally, you can see some shorts happen to at least these lows, right? Bear in mind at least those lows right there, because you have to understand highs were taken. A lot of buyers in the market right now. So, also you can kind of say, I believe this was what, Wednesday. Yeah, so Wednesday, reversal day, whatever. Thursday is probably just the continuations. Anyways, so what ends up happening on Thursday around 3 a.m. Okay, the market comes here, respects this whole area. Okay, so the market respects this whole area right here. And then finally comes for this high. Okay, trapping sellers. This is a entry you could have taken. But if you were to take this one, I would keep my stops above this high. And yeah, pretty much target the lows, right? Take some partials here. And over here. Right? This being the liquidity block. Okay. So yes, it did take out these lows. However, it started printing more low. I mean, printing lower highs and lower lows, right? Creating that order flow, inducing sellers, right? So you have to understand every time it's creating a lower low and has a pullback, everyone wants to sell, right? So it grabs that liquidity, moves lower. Taking this trade, personally, if I was to take it, I would have to keep my stops above, right above this high. That's the only way I could have taken it. And yeah, pretty much, I believe New York has the continuations actually. Okay, so what ends up happening is the market, what does it do? Comes lower, right? Prints this high right here. Okay, grabs the low. So all it's doing is just building more liquidity, right? So every time it takes out the high, you have to understand who's getting into the markets, right? You got this BOS right here, inducing buyers. Okay, this is an entry for us to the lows. And then after the market came lower, swept this low. All it's doing is just building more liquidity to the downside, right? So liquidity below here. And then finally, what ends up happening is the market takes out this high. Okay, so all that does is just induce more buyers, right? And then this is actually another entry towards the lows. Okay, this being that liquidity block. And then you could have easily targeted, take some partials here, gives you a nice 1 to 4. And then target, let's say, the lows, right? To be honest, you could be partialing out here, right? Maybe whatever you want, right? Like 50%, whatever. Take some more partials here. And then you could be targeting, I mean, you could be taking off 90% here, right? So that's what ends up happening for Thursday. That right there. Is there a rule for when a liquidity block becomes valid? Okay, so typically by definition, a liquidity block is a high or a low that's printed after grabbing liquidity. Now, I've mentioned this quite a few times inside the Discord too. We don't take trades like from every single liquidity block we see, right? There's when, like, for example, yeah, like Marco said, we don't use a liquidity block with structure, for example, right? So just because there's a liquidity block doesn't mean we can take the trade. We have to see a bunch of things happen too, right? Like, let's say a trap or some form of liquidity above the liquidity block, then that would be a great example to take a trade, right? However, structurally, if it's let's say the market prints a higher high and then a higher low, and that higher low is a liquidity block because it sweeps some internal structure or whatever, we can't take trades from there, right? So yeah, there you go. Pair liquidity along with liquidity blocks, highest probability ones. Okay. Anyways. Let's see. Yeah, like this, for example, right? This right here being the liquidity block. Okay. Now, this is an area I'll be selling from, right? You could only because there's engineering liquidity here. But after grabbing the lows, right? Look how the market comes for the highs. Okay. So trapping sellers and then liquidity block above. Right. So easily this is a good entry. And yeah, pretty much. Did that answer your question? Okay. So that was Euro on Thursday, Friday. Okay. So remember, right? After like a big move, you're typically gonna see, the market build more liquidity. So Friday was pretty much just, a rangy day. However, there was still an entry, a valid entry, which was right here. Okay. So let's go right here. Zone 3 now. Minutes. Okay. All right. So the market, what it does. All right. Grabs that high, moves lower. All it's doing is creating lower lows, lower highs. And then finally comes down here. 3 a.m. is right here. Okay. Yeah, so during London, the market reacts from these lows. Okay. So this is an example, right? You got your BOS to upside, you got your pullback, trapping buyers, whatever. Then finally you got your BOS to the upside again. The market finally comes to the lows. This is a liquidity block. However, this isn't. This would just basically be like false reactions, right? You can see some reactions from there, but it'll just be false, right? Yes. So basically, you have to understand where the liquidity is, right? So, for example, yeah, so when there's multiple taps, obviously the market's building liquidity, but you have to understand what the market's actually doing, right? So look here how first time, right, took out the highs. What does that do, right? You have to look at it in terms of the retail perspective. All it did was come into this POI, okay? You got your BOS to the upside, comes into the POI, another BOS right here, okay? So what does that do? It induces buyers, right? Comes here, prints this high. Move all this to the side. Okay. Prints this high right here, comes, takes out the low, but it's still trading within the trap. Okay, so because it's trading within the trap, there's just being liquidity being built to the downside. Okay, because imagine every time the market comes into this POI and there's a BOS to the upside, people are trying to buy it, right? Let's say you got your confirmation traders or whatever, you got your POI, this 15-minute POI, and you just got up 15-minute BOS to the upside. You got another BOS to the upside, right? So automatically, right? You got your BOS. People want to be buying. Okay. I try to think where is more liquidity, like but the low remaining tax will. Yeah, I believe I understood. But regardless, right? All it's doing is building that liquidity to the downside. And then every time it breaks a high, right? And plus being inside of this trap or POI, every time it has a BOS to the upside, taking out a high, it just induces buyers, right? So yes, you know, it's building liquidity for later because you can see highs being respected right here. So this right here would be used for later, right? Any liquidity sitting above is gonna be used for later. You have to look at where the immediate liquidity is. So if your eyes are down here, every time the market takes out a high, you should be selling to the lows. Okay, and I don't mean just any high, like for example, just structural highs. Okay, because look at it retailer's perspective. This is the high, this is the low, right? Yes, higher time frame bias is also priority. Euro just took out external, also liquidity from the left. You can easily expect, or you can easily look for, I'd say, trades to the lows, right? So I'm not taking shorts just because highs were taken out, right? You have to look at where the liquidity is. So for example, this whole area was respected. So there's liquidity below, right? Now there's liquidity below here. So what we do is trade from liquidity to liquidity. So once this high or external was taken out, liquidity from the left was taken out. Look at this. This right here was respected. Back in March. Yeah. And look how in July the market comes, grabs that, and then finally moves to the downside, right? So you have to see where liquidity is. We're not just entering just to enter, you know? Like for example, we know our targets are the lows, right? Liquidity is to the downside. So automatically, we should be looking to sell, right? And also every time it comes into this area, takes out a high, just induces buyers. And that's typically an entry for us to take shorts, right? And you have to understand this point too. Liquidity block comes into this POI, building that liquidity. BOS, liquidity block above, entry. Comes into this POI, builds more liquidity. This is now a liquidity block. Takes out liquidity right below the liquidity block, take the entry, right? Right to the lows. Yeah, that's fine, Ryan. Okay, so I believe Friday, yeah. Friday. All right. Let's see. What ends up happening on Friday, the market comes to the lows, right? Respects this whole area. Like I said, it's a liquidity block on the higher time frame, so you can see some reactions from there. It doesn't mean that it's tradable for us, right? It's just a pull, like you'll see reactions from there, a pullback, take out some liquidity for us to take shorts. And that's pretty much it, right? So the market respects this whole area right here, gives us that reaction. Grabs this high. Right, and this is now your liquidity block. Okay. Even just off the 5-minute time frame, just look at it this way, right? Takes out the high. Entry, right? Moves lower, respects the low. Right, you got your BOS to the upside right here. You got your smart money traders waiting for their entry. They finally get their entry right here. They enter right here, stops below the low, comes here. You got your second minor BOS, whatever you want to call it. Right here. And yeah, pretty much, right? So all that does is just induce more buyers. Okay, this right here. New liquidity block. And then takes out highs. What just happened? Okay. Damn. Okay. Takes out the highs, liquidity block above entry, right? So that's pretty much what it is. I mean, you look for a liquidity block, you look for some sort of liquidity, take out that liquidity, right? This right here, and then take the trade, right? Because liquidity block is above. Same thing goes here. Liquidity left here on purpose. Liquidity block right above. All the market does is grab that entry, right? Where is the liquidity? Right here. Because buyers got induced. This right here is that BOS to the upside. Buyers get induced. And all that does is tell us to sell towards the lows. All right. Any questions? Everyone's good? All right. Let's see. Let's go to gold. I use something called Trade Assistant, or I used to. It calculates lot size and everything. And yeah, pretty much. All right, so Marco, you want to cover gold or should I continue?
I can do it, bro. No worries.
Okay, say no more.
What's happening, guys? All right. Am I good to share my screen?
Yeah, let me see. Damn. I'm still trying to figure out this new update.
I know. Everything's all over the place on the new update.
All right, I think
Yeah. Okay. You can see my screen?
yeah.
Perfect. Okay. What's happening, guys? I was just taking a peek at gold right now. higher time frame wise, it actually looks really interesting. Check this out. So back in May, obviously swept that high, okay, providing us after grabbing that liquidity at the highs. We went bearish for quite a bit. Okay. Then ranged here for a good while. Okay, built liquidity at the highs. Look how price initially induced lower first. Okay, grabbing that liquidity at the lows. What that does now is it automatically gives sellers an opportunity to enter sells in at the highs. Okay, that's what happens. Look, we bang our heads in there once, twice. This is for 1, 2, 3, 4, 5 days initially. We stayed below this high. So imagine emotionally what traders are feeling like. Every time we come into the high, they sell. Okay, we sell off again. Every time we come back into the high, they're looking to sell again. So a shit ton of liquidity at the highs. Okay, when finally we go back lower, mitigation of this liquidity block at the lows, an explosive move to the upside, grabbing all of that liquidity at the highs. Now think about that. Okay, big move to the upside. Again, buyers now induced in the market. Every reaction we get going down, these are all going to be traps if we get reactions. Okay, why? We've left equals down here. And since we've taken out this high, this changes everything. Okay, buyers are now induced in the market. There's buy stops getting activated up here. And now, again, all these areas are going to be used as traps. So there's going to be limits set down here and then a ton of liquidity at the lows. So that's exactly what happens. We grab the highs, big sell off back down to the lows, and then go back to the daily. Then we respect the lows. Okay. And since then, we've gone bullish ever since. You can see price initially, we spoke about this previously, but price came into this daily area up here. Okay, this trap area, induced sellers here, moved away. Now there's liquidity above that high. Okay, we move away to where? Back down to an internal point, taking out buyers, and then we go long. But don't forget, a lot of guys in this current moment, they're gonna be like, oh, but we left liquidity at the lows. Like this is just, it's all done on purpose. Now it's gonna be used for the future. All liquidity can't just get taken out all at once. That won't make any sense. There has to be liquidity left to certain directions, certain sides, so it'll fuel moves in the future. Example being right now. Look how we've respected the low and again moved away ever since. This was back in the beginning of June, and since then we've gone bullish to where? This high. Now, since we've taken out this high, again, now this changes everything. Why? Because buyers are induced now, thinking that we've cleared highs, there's momentum in the market. Every bullish reaction now we get here should, I'm not going to say 100%, but should provide us false reactions and continuation sells down to where? I'm seeing price all the way back down here possible. Okay, so is it 100% going to get back down here? Obviously, we will never know for sure, but can these internal points be used as targets? I'm looking at this low, these lows down here we've left, these are equals. We've now approached this daily low over here, which we've technically stopped at on Friday. And then you have, right, you have these lows down here. And finally, we have this low over here. So anybody looking that was buying at the lows down here in these areas, okay, liquidity all the way down at the lows. So I'm leaning more towards that. But then again, like, I don't need to have a higher time frame, not even higher time, because this could happen over the course of a couple weeks. I don't need to have a bang on bias like that. I'm just taking it day by day, right? So maybe in next week or the following week, I switch up my bias a bit and see where price can head to. As of right now, this is what I see. But we've also just had a big sell-off Thursday, Friday. Now technically I want to see liquidity built into the market again, right? Because if you look at the 4-hour right now, what do I see? There's no liquidity right now. I'd like to see on the 4-hour. We just had a big move. Sure, we have internal points over here that we could move for. But as of right now, there's no liquidity yet in current price action for us to get down here. I want to see price respect lows like this, move away, right? And then I have liquidity down here. Okay. As of right now, and this is where everybody likes to jump the gun. As of right now, we just had this big move. There's no tradable price action right now. I need to see PA develop right here. I need to see engineered liquidity. And then I'll be able to build more of an intraday, intra-week bias again. As of right now, there's literally nothing on gold. Okay. And that's what people struggle to do with sometimes. Like right now, if people are like, oh my God, we take this low, they want to see price just fly all the way back up. Why would we do that? Right? We need to have liquidity in order to move in these directions like this. Now, if we did this all the way down, right? And then took the low. Sure, we have a reason to come all the way back to up here, but we never did that, right? There was just a big move. Boom, boom. That's it. So there's no reason for us to fly all the way back up here right now. There's no reason at all. So again, like I said, I want to see PA develop, see what goes on, maybe above this low, or maybe even we run this low and then get a reaction up a bit, whatever it is. I need to see PA develop. Okay. And that's what I feel like a lot of people struggle with sometimes is just wait for price action to build liquidity, especially when there's big moves. Like we've had Thursday, Friday, like look, for example, Thursday closed up here. And then Friday, we had a move of, is that 700 pips? Jesus. Yeah. Wow. Big move. So like I said, we want to wait for price to develop. We'll have liquidity engineered on an intraday / intra-week perspective. And then building a bias around that, it gets 10 times easier. When you're trying to build a bias and there's zero liquidity in the market, you're going to be like, when something happens, you're like, oh my God, maybe it's a sell. Oh my God, maybe it's a buy. Oh my God, maybe it's a sell. You're all over the place again, because there's no liquidity. So simply just wait for that price action to develop. And then there will be trading opportunities. Does that make sense to you guys? Perfect. And I'll repeat myself again. If you guys have gone through the course, you've seen how we trade, right? It's basically 90% with liquidity. So if we trade with liquidity, just think about it for a second. We build our bias, we form a direction in the market with liquidity. If there is none in the market, how the hell are we going to build a bias? There's no way, right? Then our system is just literally not in play. So what do? You just sit on your hands. Because if you didn't catch this sell, it is what it is. Now you just have to wait for that higher time frame to develop again. Sometimes this kind of move happens just on like an M5, and then you just have to wait for maybe the following day. But I'm not going to lie, like Monday, I'm probably not going to be trading. I'm going to see what Monday does, see where liquidity is built. Maybe Tuesday I show up and there's going to be tradable price action. Right? So it all depends. I need to see where liquidity is, and then we build our bias and we target these liquidity areas. Simple as that. Keep it simple. Some days there'll be no trades. So for example, maybe Monday, Tuesday, we build liquidity. There's no trades Monday, Tuesday. Wednesday, maybe there's a trade opportunity for me. So patience. And I've said in the Discord, I'll say it again to you guys, quality over quantity. I want you guys like 1 to 3 trades per week. Man, that's all you need. Like last week, we spoke about it. Monday, Tuesday, Wednesday, Thursday. Sorry, not the week that just passed, the one before. Monday, Tuesday, Wednesday, Thursday, there was 0 trade opportunities. And then Friday, there was like a couple on gold, right? And there was some beautiful opportunities. So all it takes is 1 day. Okay. And that's the power of showing up every day, but not essentially wanting to trade every day. Okay. And again, that's something a lot of people struggle with because everyone's so eager for progress, but less is more in trading. And I promise you that. The only time I'll say to take more trades is when you're in the learning phase, because you want to get those reps in, right? You want to understand the strategy. But once you do understand the system, less is more. Okay. Cool. So as for gold, there was some opportunity on what day did we take these trades? It was Thursday, I believe, right? Yeah, Thursday. Let's go over Thursday because there was some opportunity. Perfect. So, like we were just speaking about higher time frame, price trades above this external high over here. Okay, keep an eye on these lows, please. The next couple weeks and stuff. It's gonna be interesting for sure. But also remember, just because we had a sell-off doesn't mean we can't go back up, take the highs, and then continue lower over the next couple again, weeks, days, whatever it is. Right? Maybe we get a nice build up like this, go up, respect something, come lower, take something out, maybe go long once more to clear the highs, and then we continue selling. So keep these things aware. But as of right now, like we were talking about, just wait for price action to develop. Oh, sorry, I used the replay tool anyways. We're all the way down here at this current moment. Fuck that up, but you get what I'm saying. Okay, so Thursday. Okay, cool. So we got the 5-minute here. Okay, cool. So first trade, I believe, I gotta remember. Oh yeah. Okay, cool. Sorry, it was on the 15. That's why I couldn't find it. Okay, so from here, this is in London. We print this high, we sell off, okay, and we take some lows to the left. Okay, and we also take out this structural point. If you look on the M5, you can see it a little more clear. Take out this low, right? And then we return back to the highs, move away. Respect the low, move away. So now what? We've respected the highs, moved away. And now we've respected the lows and move away. We do want to see price above here. Why? Because now if price trades above this high, that tells me sellers are going to be trapped. And then what do we have right here? Liquidity to the lows. As simple as that. Highs taken, lows taken. Okay, and if you look to the left to get more of a maybe a precise target, you have why did this low print here? If you look to the left, it'll answer that question. You have this area respected. Right, so you can drag that over. Let's get rid of these. So you can get more of a precise target if you want. Here's the liquidity from the left-hand side. First entry was taken, and I've done this in the past. I explained to you guys in the previous webinar. I'm going to always explain my entries and my thought process, but I saw this imbalance above. I knew that once this high was taken out, sellers were trapped. So as soon as we spiked above this high, I entered volume. I'm comfortable entering at an extreme. Okay. And I open my stop up quite a bit. But that's just, usually my extreme type entries. And I have a specific set volume I'm okay with entering at extremes. These aren't entries. Again, I'm just preaching to you guys that you should be taking. This is more of like an experience kind of thing for me. And again, it's whatever you're comfortable doing. So for example, for gold, if you guys are comfortable with opening up a lot or two lots, I predicted that this was going to be the extreme. Okay. After, again, using all that knowledge on our liquidity here, right? So sellers are trapped when this high is taken out. You have that fresh imbalance right above on the 15. And look at that. We spike right into it. And then that rejection comes down. So that was my entry number one. And then obviously I wanted to see a more of a confirmation based entry to add the rest of my volume. And that came right here. So I was on the 1 minute. Usually I'm not, but in some instances, usually like we talk about, when M5 is too squeezed up, I'll hop onto the M1 to open up the M5 up. So again, same concept. We sell off and we respect the lows. Any reactions at the lows are just going to be traps, okay? And they're going to be building liquidity to the downside, like Abid was just talking about on Euro. False reaction, we move back to the highs. We respect the highs and move away. So now sellers are entering positions up here. So we got liquidity up here. Okay, so we're building that. We move away. Then we even respect the lows here. Okay, inducing buyers. Why? Because maybe they're on like a very, very small perspective. They see this as a BOS, whatever it is. They want to be buying down here because they get reactions off their POI. Okay, the market moves long, takes out this high. Now this is going to be a trap. Buyers are induced after taking out this high. And what do we have right above? Boom, liquidity block. So I waited for price to come a little bit deeper. So the RR made sense. Enter my position, stop loss tucked above my liquidity block. And I'm targeting liquidity at the lows. Just like that. Okay, so again, this was an extreme type entry, just with a fixed lot size. Target there. And then here is my actual confirmation based entry where I actually add the remaining volume. All right. And again, just targeting that liquidity. This trade makes sense, guys? Directionally wise, direction is the most important here, to be honest with you. I just want to make sure you guys all understand that. No response. I hope that's good. I hope you guys are not confused and understand. Yes, perfect. Nothing too complex here. But yeah, these are honestly my favorite type trades. Again, usually you guys will always see 80-90% of our trades are always off liquidity blocks, right? So when you see these type of entries happen, right? When we take out a previous low, market comes to the highs, respects the highs, okay, moves away. Now you have that liquidity there, okay? And then if we have a liquidity block right above, these are my favorite entries, okay? Because I'm just selling when that liquidity is taken, okay, when that money's taken here. And then you have your liquidity block right above. All right, these are my favorite, just like this example here. Liquidity is taken here, and here's your liquidity block. All right, and like we've spoken about, you can always try to refine your entries as much as possible. I'm not the biggest fan. Like you could just wait for the whole candle to get tapped, which it does here, so it works here. Or you, like I've spoken about previously, most of my entries are when the liquidity gets taken. But in this example, I had to wait for it to come a little bit deeper just for my R to make a little more sense. Because typically I'm taking 1 to 3 minimum. Okay. And that's just something I'm comfortable doing. Everyone's different. We spoke about this. If you guys want to take 1 to 2, 1 to 2.5, whatever it is, that's something for you guys to test and figure out what works for you. Okay. But this is just what works for me. All right. Anybody got questions on gold price action from Thursday? Let me know. Actually, let me, I can run through this too after. Let me delete this and explain the rest of the move here. Which I believe you base yourselves off because, well, I mean, I hope you understand, not just because of that. Everything came from when we took out this. Right? That's what I base my sells off of. Because if we were going to go long, I want to see the liquidity taken at the lows, right? Look, we left the equals here. We've taken out this high. So this is going to be, this is traps here. Right? One second, guys. I'm just going to see. I just want to make sure everybody in this call right now, who's Lenovo i3 series? Sorry, so I just want to make sure some names aren't with the Discord name, so it confuses me sometimes. If you can speak up in chat, if you don't mind, brother. If you don't, I'm gonna have to just kick. Also, who's iPhone? Who has your name as iPhone? iPhone and Lenovo i3 series, which I believe is just a computer, but speak up, please. If not, I'm gonna have to just remove. I just want to make sure people aren't getting added in here. Yeah, no worries about you, brother. You're all good. Appreciate you speaking up. But yeah, the guys who just have their names as Lenovo i3 and iPhone, I'm gonna have to remove you if you don't speak up. Okay, perfect. Appreciate you, brother. And the entry over here makes sense too. Let me take a look. Nuno, 1 second. Yeah, I'm gonna cover that right. Wait, yeah. I'll cover that right now. That's what I was gonna do. But yeah, sorry, there's one more person, iPhone. If you can speak up. You have your name set as iPhone right now. If you can just let me know who you are in the Discord so we can just continue on with this. Again, if not, then I'm gonna have to just remove you, brother. Please. Mr. iPhone. I'm gonna give you 20 seconds. Avid, I am not host, I don't think. So you're gonna have to remove him.
All right, got it.
For the people in here, I believe everybody else did it, but yeah, just try and match your name on Discord. And also forever who's watching this recording for future webinars, just try and match your Discord name. And if you don't, at least speak up so I know who you are. But yeah, okay, let's continue. So again, there's my sell on gold. We take the liquidity at the lows. And then now this is when the higher time frame comes into play here, right? So again, we've taken out this high to the left. If we were going to go long, we would have just taken out this high, right? And just continue to the upside, taking out this high and eventually maybe this one. But if not, after taking out this, This is a structural point. This is where people are selling from, right? Down here, or sorry, below this high. And you can see we actually, right? We respected here for a bit. Move away from this high down to this low, leaving liquidity at the lows. Then we trap the sellers. And same thing, take out the sellers. Now what's this going to be? This is a trap. We do not buy from here. What's this? Trap. We don't buy from here. And if we do sell off, if we do take, why did this low print? Look to the left. You have all of this liquidity here. And that's what it takes out. Look, boom, pull back, and then just continuation down to these lows here. And then the higher time frame areas to the left-hand side. As for entries, like confirmation-based entries on this one up here, let me take a look. So nothing to the left. Only thing I would say is you have a liquidity block up here, right? So, I mean, ROIs, this would have to be like a higher time frame based. Let's see if you can get a 1 to 3. You can. So if you did take this sell here, right? This is when sellers are trapped. So liquidity is taken once this high is taken out, but you'd have to cover that liquidity block up here, right? Does this extreme entry make sense to you guys? Because this is how, if you do want to take extremes when liquidity is taken, you need to make sure you got that liquidity block to the left-hand side over here for you. And that's the confluence to take in this sort of entry. Or like we've spoken about, you'd wait for price to come into these imbalances up here. But unfortunately, if you waited in this example, you wouldn't have gotten an entry. So this is the beauty of just taking the entry when the liquidity is taken and just tucking your stop in a comfortable spot, aka above this liquidity block. And then selling into the lows here. Okay. That's the extreme. If I was to take that, that was the extreme. And if there was a confirmation based entry, I don't believe there was one I liked too much. But yeah. No, nothing for me, guys. Why? I'll show you here. We built a bunch of liquidity at this high, and then this price came up, respected retail, sold off. So nothing I like on confirmation wise. And you can see here, we even just left a bunch of liquidity there as well. So the only entry available to my that I would have taken would have been when we take that liquidity at the highs, and then stop has to go above that high to the left hand side. Okay. But yeah, that's it for gold. Cool. So again, I'm gonna go back to the higher time frame real quick, discuss what we can maybe see. I'm going to put out a little forecast too when price develops though. So maybe at the end of Monday, I'll put a chart out. But again, as for right now, this is where Friday closes up. Big move. Now I want to see price develop. So most likely, I'm not going to say 100%, but 80, 90% chance Monday comes along. I'm sitting on my hands and waiting. And I have no problem with that. Okay. Because then when liquidity gets engineered, it's going to make trading 10 times easier for myself. Okay. And yeah, that wraps up everything for me. Everything I wanted to cover on gold right now. Anybody got any questions on gold before I close up my screen? Let me know. Let me know. All good. Perfect. Okay. If no one else has got questions, that's it for me. Could you take a look at AU on Thursday? Okay, let's do that quickly. 1 sec. AU on Thursday. Okay, so oh God, man. Look at this price action. What time did it end up selling off? Late in New York. Okay, so takes this. This is, I mean, I don't love this price action. Takes out this high over here. Okay, so trap sellers. Anybody looking to take sales off these areas, respected here, respected over here, literally just engineer liquidity in the market like this. Okay, then we take out that high. Oh yeah, I posted a little chart on this. I remember now. Hunt for that internal. From here, we respect the lows, but any reactions are just gonna be trap. goes long, takes out more internal. You can see it respects this little liquidity block here. Okay. As for entries, let's take this to the 5-minute because the 15 is getting quite squeezed up. Nothing I like, honestly. Respects the lows, we go higher. We sell off, induce sellers. This is going to be a trap. Classic. We want to see price above. Okay. What you have to understand is here, we take out this high. So if you were trading this at current price, we take out this high, but there's not really any liquidity at the lows yet, right? What do we have at the lows? Liquidity block. And that's why price respects it. So we respect it. Okay. Respect the lows, move away. Now there's reason to push down here. Okay. And we end up inducing higher once more. So trapping sellers. As for entries, nothing to the left. What you could have done is this, to be honest. So we have a liquidity block up here. So if you wanted to take this sell, it'd be like this. You'd have to cover this high. 100%. This is the high you have to be covering. Obviously, because this is our liquidity block. And if you do want to be taking extreme entries like this, you need to be covering that liquidity block. So not a bad entry, but you just have to open up your stop. Like you wouldn't just tuck it above this high. It doesn't make sense. It needs to be above that liquidity block. Like that. Okay. And then target. Nice clean target down here. Boom. That's what I thought. Thank you. Perfect, bud. Yeah, no, it's a pretty clean one, to be honest. But then again, this is where stop loss placement is important because this is your liquidity block. So you need to make sure you cover that. But yeah, nonetheless, clean. Clean, clean, clean. And also remember, like we spoke about, once we respected these lows and moved away, now we have reason to move down there, right? So you got to be adding that logic to your analysis. Can we push down here now that we moved away? 100%. So you take that sell. Here may be a partial. It depends like RR-wise if it makes sense. Now it doesn't. Maybe this internal over here to the left. Okay, 1 to 3. And then here's a target where you can take like 80%, 90% off. Cool. Pretty clean. Pretty clean. And again, look how the bias is built here right after we take this high out. Okay, we take this high out. So any reactions on the way down, again, are going to be false. So this bullish reaction that happened Wednesday night, all false. All this does is build reason for us to push down here and grab that liquidity. Cool. Good stuff. All right, boys, that is it for me. Abid went through some good stuff too. So that wraps up this webinar. And I hope you guys have a good rest of your weekend. Continue to do your studying, your back testing if you want to do that today or tomorrow. And then yeah, we'll see you guys back on the charts Monday. Actually, what's news looking like this week? I wanted to take a peek. Let me share my screen as well. Monday, nothing. Wait, I've never seen. Why is it like this? It's just completely blank. Tuesday, nothing. Wednesday, we got some news, USD news, some Euro news. So the EU traders, you got some stuff in London Wednesday. Thursday, decent news in New York, and then Friday. So nothing too crazy. So no like big news events. No NFP. I think NFP is gonna be next week, but no CPI, no FOMC this week. So pretty standard week coming up. Yeah, let's see how it is. Cool. So I hope you guys have a good rest of your weekend. I will see you guys back in the Discord Monday. And yeah, good stuff. We'll talk soon. Thank you. No worries, boys. We'll talk soon. Take it easy.